This week's crypto recap. Bitcoin sell pressure confirmed for July. Crypto court battles ramp up, and why Ethereum creator Vitalik Buterin just invested in a new scaling project. We cover all this right now in the Collective Shift weekly recap. Actionable insights and a breakdown into the crypto market, all in under 30 minutes. Nick, how are you this week?
Yeah, thanks, Matt. I'm keen to get into another action-packed week in crypto, from court battles to MegaETH, which is, I think, a new scaling solution that looks like it's going to be one of the big topics coming into the later half of the year. Perhaps they'll get us into a market update because the market looks as choppy as always.
Yeah, for sure. We've seen quite a bit of volatility after weeks of feel like just bouncing around price-wise. So the last 7 days or so, Bitcoin's up 1%, ETH's up 3%, Solana's up 16%. We might get to that a bit later in the episode. But really, it was for a long time, until the past 2 or 3 days, it was a very red week for crypto, concerningly at a time when US stocks and other, I guess, risk-on assets were doing pretty well. So we might unpack that a bit. But yeah, at the moment, Bitcoin just bouncing around early to mid 60,000s, which is, the key levels, and everyone hoping it doesn't go back to high 50s. And people also, the bulls, are hoping it sort of goes back through the early 70s, and there would be in price discovery. So bouncing around. In terms of the macro side of things, pretty quiet at the moment. We've got the next Fed meeting or announcement in the last day of July. But before then, the CPI data will be the big one to watch. So the US inflation data, that's coming out July 11. So between then, not too much to report on.
So on the topic of, just the market, I know you put out a very handy state of the market and the way you're seeing things at the moment for members that we can potentially, have a link into the comments. Maybe just at a high level, what was that? You just, the main contention there that you're seeing it in the market for the rest of the year. Is it time to worry, or is it a time to just be reassured, just to know that, volatility is just sort of part of the game here?
Yeah, I think it's volatility, definitely a part of the game to be expected in the altcoin market especially. But I did post some members that got up on my screen here, just a bit about why I think the sell-off has been a bit too extreme recently, and why myself, as a sort of a longer-term investor, thought it was a good time to allocate some more capital. Yes, could go down some more, like we're not fortune tellers, but I think risk-reward, I think it's really favorable. So I explained sort of why that was the case last week's post for members, and look, got a bounce over the weekend, but definitely we could easily just see it go back down in the coming days. But I think when you zoom out and you look back on the full bull market, which I'm still expecting will last for another 9 to 12 months, I think this will be looked back on as a time where, well, hindsight's obvious, but a time where anyone that was in the market should have been allocating more if they still had some to allocate, which in this case I did. So I'm doing a deeper post even this week, explaining more, unpacking my reasons for my market outlook and whatnot. Obviously there's some headwinds that we'll get to in this episode that are still worthy of consideration. But that's essentially why I took the opportunity last week to, I guess, tell members why I'm allocating some more capital.
Perfect. And if you're a member or a prospective member, check out that link that we'll post in the show notes.
Yeah, for sure. But let's get into, first big story for the past week definitely was, the Mt. Gox, the exchange that collapsed about 10 years ago or so. We're finally getting towards their Bitcoin repayments, where they own about 142,000 BTC, or in the sense they have that much to give out to creditors and former users and whatnot. We're finally getting some movements on that, Nick.
Yeah, this is one that is 10 years in the making, really. Mt. Gox creditors, the people who lost their money in the Mt. Gox collapse back in 2014, have been told for years now that repayments are getting closer and closer. And finally, it looks like this is the actual real time that it's happening. It's not another fake news headline that we've seen many years ago, which moved the market. It just matters because, as you mentioned, Matt, there is 140,000 Bitcoins out there, which is worth anywhere in the realm of about $8 to $9 billion. So a real tangible amount. If everybody started to cash out their Bitcoin, that could have serious ramifications on the price. But I know we put out a newsletter last week just looking into this and why maybe it won't be as bad as maybe headlines are made to believe. when you see that, news plastered that $9 billion is going to enter the crypto market, that's a lot of scary headlines that make a lot of people panic. But there's been some good research out there by the likes of Galaxy Digital. They have a research team and a lot of good daily and weekly insights into the market. They come out and said that about 75% of the creditors chose to took an early payout, which is kind of funny because like early, it's about 10 years, but early for these purposes, they took a slight haircut to get paid straight away. So that puts in the perspective of 25 that is off limits there of that 9 billion. And then on that 75%, there's already a lot of cryptocurrency that was kind of sold in claims, and then about 60% in the hands of individual users who could get that cryptocurrency back. And then, that's kind of what we're working then from like that 5 billion. And then of that 5 billion, not all will probably sell right away because, as they argue, some of these people have been holding for 10 years. They are the most kind of long-term perceived holders, because they were in early, and as I said, these claims have been bought and sold. So if we take into consider the tax implications, individual creditors, they've kind of resisted multi-years of getting claims on their Bitcoin. And then just the creditors are skewed towards maybe long-term Bitcoin holders. Then we have an idea that maybe not all of that money is going to be sold right away. Some might be held. So it's a matter of whether the market is big enough to absorb it, which it definitely looks like that it is.
Yeah, thanks a lot for that breakdown. It definitely, goes a lot past the headline number, and thanks for, breaking that down. Something I hadn't appreciated personally was the amount of opportunities that users who were really desperate for liquidity for, life circumstances or whatever, they could sell their claims like throughout these years on secondary markets and whatnot. So that was something that I learned and sort of, calmed me a bit in terms of the amount of sell pressure coming for Bitcoin, which, we're not saying no one will sell. There'll definitely be people who, thanks about Gox for the Bitcoin, like I'm going to now sell this like on any exchange. But I don't think it'll be that way that, we talked about. So great newsletter, which I've shown there on the screen, and, you can subscribe to that newsletter, at our website at collectiveshift.io/newsletter. So let's get into ETF news. It's 2024. I feel like ETF news every week, but for good reason. Like it's such a major part of this, this particular bull market for sure. So just getting up on my screen here, the Ethereum ETF, there was news over the weekend. I think we were commenting last time that it could be early July. That was where people were speculating, we'd see these ETFs be approved for trading. News has come in over the weekend that the SEC has responded to, forms from these applicants, and that would sort of imply that, hey, it might get pushed out, by a number of days. As we've been saying this whole time, whether it goes live early July or mid-July, it's really not that much of a difference. So it looks like it'll be more like mid-July, possibly even later in July. So I've just got on my screen there the tweet from Eric Balchunas sort of breaking down like why he has pushed back his estimated launch date. But at the grand scheme of things, not that much of a change. Hey?
About a week or so, and the high level there is they may need a few more days to get to these comments. So that is a new date we're looking at, the July 8th.
Sure. Now let's get to the Solana ETF. I'll let you take this.
Yeah, this one was kind of a shock for a lot of people in the industry, just to see one of the biggest asset managers, VanEck, they come out and filed the first, or desire to file the first Solana spot ETF. Huge news considering we've seen what's happened with Ethereum, and now that kind of has opened the floodgates to other potential cryptocurrencies that are kind of making the case then if Ethereum's allowed an ETF, then why can't we? And that's now we're starting to see the ramifications of Solana as that next big cryptocurrency to enter the discussion. So this is the first kind of filing for the US, and marks a huge shift in the discussion, because after all, the SEC is actively or has actively included Solana in that bracket of securities in previous lawsuits against, I think, the likes of Coinbase and other exchanges. So big one here. I'm not sure about you, Matt, but I think the wide consensus here is it's pretty optimistic to think, we're going to get a Solana ETF this year. Even next year, to be honest, is probably the best case for any of this, just because of the overhang with Solana still relatively centralized in a few key aspects and doesn't have as much clarity as ETH has, considering that the SEC has come out and said they've kind of shut that chapter into looking into Ethereum as a security. So a lot going on, and I think no doubt the number one thing to look for is the US presidential election, because that's going to have a lot of say whether Gary Gensler, who was famously anti-crypto and taking a more hardline stance, if the right people get on board, maybe the attitudes change, and maybe Solana can then, especially as these court battles end, maybe in a favorable way, we may start to see a sort of a changing of the guard, and maybe Solana could be a viable ETF.
Yeah, I definitely agree that there's a lot of water to go under the bridge, so to speak. A lot of things need to go in place for this to go live. Yes, I would be really happy if it went live at any time in 2025, but there's every chance it even goes longer than that. But certainly they've, I guess, pushed the discussion, and by Van Eck filing it so early, I suppose, earlier than many expected, it's at least got that discussion started. Yeah, I would take a closer look into it if the likes of, BlackRock also filed for that Solana ETF. I think you'd be stupid not to sort of lean in further and then see whether it's more possible. But at the moment with just Van Eck, I think we just run with the assumption that it'll be 2025 at the earliest. So yeah, we can get into one of those lawsuits that you did mention, because more progress on that, or I guess another chapter in a sense with a new lawsuit from Coinbase against the SEC. So Coinbase here saying that the SEC is basically, has been unlawfully sort of limiting information and not following due process in terms of gathering facts and information from the perspective of Coinbase, and they're sort of suing the SEC there. So Coinbase and the SEC are actually in 3 separate legal battles at the moment. So already, it's a massive part of this space in terms of SEC versus a lot of different entities. Coinbase in and of itself has 3 battles, but we might just tie into what was more significant in the past 7 days was the SEC filing a lawsuit against Consensys.
Yeah, this one was absolutely huge, and it come off the back of positive news for Consensys last week and then in the weeks prior with the Ethereum security debate kind of being shut. SEC has come out and said, hey, we're not done though. We are looking to sue you about the way that they handle cryptocurrency. So this is probably the biggest issue that's going on in the space at the moment, in my opinion. It probably feels like not a lot is understood here, because the SEC claims that Lido and Rocket Pool are unregistered securities in this lawsuit against Consensys, which is one of the biggest kind of software builders in the space building on Ethereum. And they also allege that the company Consensys failed to register as a broker, as well as offering and selling, these unregistered securities. Specifically, they're targeting MetaMask swaps. So whenever you go into your MetaMask browser and you do a swap, essentially the SEC is saying that you're a broker, you are facilitating this, and they don't have the proper licenses, and the proper regulation to do this and serve what is also US customers. That is what I think the big focus is, because if that comes out true, then that says that a lot of what people are building in Web3, in a lot of these web wallets and a lot of these infrastructure, is not playing by the rules, and that really throws everything into kind of disrepair, really, if, the whole industry then is considered not up to, regulation and not following the rules. So this has enormous knock-on effects, and probably one of the new lawsuits that I'm definitely following very closely. They had a really good quote here, which also said that, quote, the SEC has been pursuing an anti-crypto agenda led by ad hoc enforcement action, and this is the latest example of the regulatory overreach. So that was a quote from, I think, the head of legal at Consensys, just saying that, hey, it's part of a wider, intrusion on us, and no doubt we're going to be seeing them fight back. But this has enormous ramifications for this industry.
Yeah, well said. And even short term, price action wise, we saw Lido and Rocket Pool sell off by double-digit percentages, in the minutes after that filing came through, just to give you a sense of, I guess, how much these things can affect prices, but even longer term, how aggressively or open I guess the US is, taken into crypto, which is, enabled by, I guess, the SEC in a way, but more importantly, like Congress and lawmakers. That will definitely affect how much adoption is for crypto protocols and blockchains, and then that will also have big ramifications for the valuations of these cryptocurrencies as well in time. So it's just too big to ignore these legal battles, and a big chapter definitely at the end of June there. So we'll continue to cover these as there are more updates throughout the rest of the year.
What about maybe shifting gears to, I guess, looking into Ethereum more specifically? Another really positive news item I saw here was MegaETH, which was a highly anticipated project that's coming live maybe in the next couple of months at the end of the year. They raised, the MegaTeam's labs, they raised 20 million in a seed round backed by Dragonfly and a lot of angels such as Vitalik Buterin, the co-founder of Ethereum. I'm not sure if you're following this one, Matt, but another L1 or another L2 is on the way, touting itself as a real-time blockchain. Essentially what that means is, that the speed of processing that you need is going to be there. So they're promising 100,000 transactions per second with extremely fast responsiveness. So they're kind of building on Ethereum as this new L2. Is this one that you're following a bit, Matt?
Yeah, I've been following this early project. I think it did get mentioned in some of our earlier content, like earlier this year. I think when Victor was doing his post about Monad, there's a lot of analogies to Monad. MegaETH is sort of like Monad, but on an L2, if you really tried to simplify it. I know in your post earlier this year, Nick, when you were talking about the outlook for Ethereum, you used MegaLabs as one of the examples of the teams working to, I guess, just try to advance like Ethereum scaling technology. Like I think everyone talks about Optimism Arbitrum, but I think people forget that those teams are working on scaling their own solutions, but then you've got external teams coming in that are bringing their own ideas, such as MegaLabs, another one, Paradigm, even with their Reth client as well. So I guess what I'm saying is this is another example of a reason to be optimistic about the future of Ethereum. Like the jury's out of whether this stuff will work. Obviously, like they've got now a lot of funding, a quality team to build it out. Whether it eventually is able to fulfill its promises, time will tell. But I guess why I do like the looks of MegaETH is just because it's something completely different rather than another copycat layer 2, which I think a lot of people in the market sort of getting sick of in a way of just like, why there needs to be a 48th and 49th L2 if it just sort of does the same thing as Arbitrum and whatnot. Whereas this one, MegaETH, once it does go live on mainnet, will be very different to any other L2 that we've seen to date. So that's very welcome news, and excited to see it progress.
Perfect. Maybe shifting gears to other projects in the space. On a similar topic though, Blast. They announced and finally did their airdrop and their launch to their early users. This was one that you have been following closely, Matt, especially in the NFT space. I was surprised that it didn't reach as high as a valuation that many is expected. And I did notice that TVL did reduce a decent amount following that, as we saw, the trend whenever you airdrop to users who are, really incentivized for that airdrop, and then you normally see some of that value slow out. But were you able to get this one, or have you been following that airdrop?
Yeah, we'll be getting this. I haven't claimed my tokens yet. I think I would have if the launch was more successful. But yeah, I think the FDV, or fully diluted value, was predicted, or I guess majority consensus, I would have said, would have been around 4 to 5 billion. Like that was most people's targets that I saw. And it launched at about 2 billion. I think it's since come up marginally, but rounding it down, it would still be at 2 billion. So yeah, unsuccessful, I suppose, compared to what the market was expecting. And the team behind Blast has, sort of uniquely compared to their history, has been rather quiet in terms of sort of, going into detail about what the token does, what's coming up for Blast. So I guess the people who are maybe clutching at straws for a bull case are sort of saying they're deliberately being quiet so people can like sell who aren't fully invested into the like ecosystem. But I think that is clutching at straws there. Reality is, I think, it's another L2 at the end of the day. Yes, it has a unique value prop in terms of the native yield. Like that is a pretty neat sort of like property or quality, but is it enough to be at the same FDV as, the likes of ZK Sync or even Starknet, where there is a next tier down from Optimism and Arbitrum, where their FDVs are about 8 billion. I think ZK Sync and Starknet are about 5 or a bit less than 5 billion. So I think Blast, at the end of the day, should it be half of ZK Sync or Starknet? I think that's probably at the lower end of what I would have expected, but by no means should it be anywhere close to Optimism or Arbitrum. So we'll see what happens with the team and their sort of plans for what Blast can do. But for now, I think I don't blame the exodus of TVL when there's not really any information about what's next.
Maybe staying on some L2s, Arbitrum DAO, they proposed for ARB staking backed by 50% of their surplus sequencer fees. So some of the profits that they do make are potentially going to be reinvested back into the ARB staking to provide more functionality to the ARB token. This one's quite unique, and I was really excited because we put out some content exactly about this topic of are L2s useful and what do their tokens do? Because at the moment, a lot of them were just labeled as kind of governance. They didn't have explicit ways that they could be deployed and used, because a lot of the native gas token is ETH for a lot of these L2s. And now we're seeing a different way that potentially these tokens can have utility and then value by adding in some of that revenues and the fees into the staking yield. So quite an interesting one, and hopefully we start to see more L2s do similar things is what I'm expecting.
Yeah, good point there. And we've been waiting for this a while, and I think Arbitrum is probably the only one now that has the capacity to do this sort of thing, given how much of a competitive advantage they have at the moment. Any other earlier stage one, you probably wouldn't like them sharing excess revenue at this stage. But interestingly enough, as you can see on the screen there for anyone watching along, that another reason they cited was also because just to improve the security aspect and incentivize people to be more participating more in governance, which they haven't so far, which is not really surprising. We wanted to get to Solana. There was a big feature release last week, Nick, with something called Blinks, which is short for blockchain links. I'll just let you break this down. It's up on the screen now.
Yeah, so blockchain links is this new way to sort of bring users on-chain to interact with Solana without explicitly, seeking it out in a way in these Web3 apps. So it kind of embeds links to on-chain actions from any website on the internet, including social platforms like X. You get to be able to mint NFTs, send tokens. It's just embedding those on-chain actions inside, your existing Web2 platforms. What really struck me explicitly was that we saw similar things start to be developed on Farcaster, which is a crypto native social media network. They came out with Frames, which is a similar idea of accessing apps in that social media, platform. So you don't have to, go be dragged away into new tabs, into new links, which can kind of really make the user experience really difficult. So Solana, in a way, is following that lead in, natively supporting some of these on-chain actions on social media sites. So another cool innovation by Solana, and a really big week for them because they also had out, I think, Colosseum was a venture fund built out from Solana. I think it was built out from a hackathon that come out and raised $50 million. Mm-hmm. So a lot of innovation happening in Solana, which is all really positive to see.
Yeah, for sure. I think from my understanding, Colosseum, it's sort of like what ETH Global is for Ethereum. And if you just imagine ETH Global, if they announced a venture fund or an incubator sort of thing, how big that would be and a catalyst. So, and Solana continues to tick all of boxes fundamentally in terms of just week after week, big announcements coming through. Just quickly, we'll get through AO here. So yeah, we've released their tokenomics for the AO token. As expected, the AR holders were, included in that. So holding AR, you're able to receive the AO token. So 36% of total supply going to AR holders, not immediately, obviously. This is sort of, released and issued over time. So the distribution and tokenomics of the AO token are going to be mimicking Bitcoin itself. So 21 million supply and halving. So the emission rate halves every 4 years, as I've got up on my screen here, exactly like Bitcoin. So yeah, good news there for AR holders. And if they are going to participate in AO, I think I would assume, like, I haven't looked into this myself, but I would assume you could even earn some additional incentives or extra compensation for tinkering with different testnet things on AO and whatnot.
Perfect. Maybe keeping on the R1 front, finish on Ton and Telegram network. So I saw metrics had accelerated and kind of went vertical, really. We've been seeing a lot of plateauing, but then we've seen a huge shift to the right for user engagement, for on-chain transactions, for wallet creation, and that's been topped off with just a lot of investment that has gone into the network. I know this one we talked earlier in the week, Matt, about whether this is going to be here to stay, whether it's going to remain in the top 10, top 20 in a couple of years. What's your take on Ton network? I know you had a really good point that Ton is specifically built for payment for smart contracts and a lot of more sophisticated behavior, which could potentially, hamper it in the short term. But, its distribution just far overpowers any of that limitation and, will only be fixed in future upgrades.
Yeah, that's the big argument at the moment, an enormous distribution from being associated with the Telegram ecosystem. So people can sort of, without knowing, be connected to the Toncoin or using, the open network that's associated with the token itself. So that's sort of the bull case, or an immediate bull case that people cite. But yeah, just some weaknesses or challenges for Toncoin to do with how developer friendly is it, and is there native programming language or the native virtual machine, is it really compatible with existing knowledge base of smart contract developers, or do they have to go the extra effort to learn how to develop with it? So, you could argue Solana had that problem at the start. You could argue Ethereum had that issue at the start. So it can be done, creating a big thriving ecosystem. I just question, whether there are enough developers interested in building on that blockchain specifically. But definitely the appeal of it is that a lot of users you could potentially reach. So it's one we'll have to watch closely, like Pantera, another fund that's launching a fund just to focus on this Toncoin ecosystem. So there are some strengths, but yeah, in terms of it being more oriented towards payments, in particular, optimized for payments, it sort of cancels out some other applications that other blockchains are better suited to. But again, if there's a big enough demand to change that, maybe it could change. So yeah, one to watch for sure. It's already up to 9th on market cap. So yeah, good shout out there.
Perfect. Maybe shifting gears to things to look forward to. I think the main thing I've got on my watch list is just that ETH ETF date, whether we're going to finally get a locked-in announcement. And I also saw here that it kind of, that July 8th date is also coincides with EthCC. So, maybe some of these issuers were a bit late because they want to, have a nice, perfect launch to EthCC with one of the biggest ETH community events in the world. That is happening on July 8 to July 11. So potentially we could get a very exciting EthCC with a launch of the ETFs on a similar date.
Yeah, that in terms of underrated or overrated for the past week, I'm going to go with, underrated in terms of Polymarket. It's not something we really talk about, or there's not much attention of it in Australia, but it is a blockchain-based predictions platform deployed on Polygon, their proof-of-stake sidechain. And it's hit $100 million US in monthly trading volume. So it's obvious, no surprises that it's caught a lot of use case or a big market on that platform. Is the presidential election coming up in November. Also has use areas in terms of sports betting and other predictions to do with crypto projects and whatnot when they'll announce something by. But yeah, 203 million in terms of bets placed on the presidential elections. So yeah, shout out to Polymarket for actually having a platform that a lot of people are using, which is not seen often in this space.
Perfect. My one will have to go shout out to maybe an overarching theme of big firms getting involved in the cryptocurrency space. I noticed, as we always do in bear markets, we saw them retreat. We saw when markets bounced up, we saw, people start to enter the space. And I'm just seeing another potential flow of entrants back into the market. And that's going to be the one thing that I look for in the next year that really helps guide me into understanding where we are in the market. We saw Sony Group overnight come out, and I think they've helped acquire Amber Japan, which is one of the largest, Amber's one of the largest cryptocurrency companies out there, market makers. They come out and started going into Japan, and Sony Group has acquired Amber Japan to make a play into the exchange space. So really big, noteworthy advancement here. I think if it was the bear market, we wouldn't have seen this. We would have seen, companies stay away and tread very lightly. And this was kind of reinforced as well with other companies such as, I think it's State Street Global Advisors, who was another investment advisors firm who were notably anti-crypto in the last couple of years. And they've started to now work with Galaxy Asset Management to start to enter and offer crypto products to their client base. So we're starting to see slowly but slowly these firms start to make their way back into crypto. And that's going to be what I look for in the future with some of these big market makers and even traditional firms start to get into and support the crypto space.
Exciting stuff for sure. That is a wrap for this week. If you are looking for more insights, see our revamped Weekly Shift newsletter, providing free weekly market insights every Friday. Subscribe at collectiveshift.io/newsletter. That's collectiveshift.io/newsletter.